Hello, everybody. Welcome back to PwC's Next in Health. I am Glenn Hunzinger, PwC's U.S. Health Industries leader. Today, we are looking at what's ahead for pharma and life science dealmaking in 2026. As we look across everything, innovation continues to be strong. Balance sheets and capital markets exist for financing, and there's clear signals that we're kind of set for an active year. Joining me today is Roel van den Akker, PwC's U.S. PLS deals leader. Roel and his team have just released our latest view on what's ahead in 2026 as it relates to PLS and M&A. Roel, thanks for being here.
Glenn, thanks for having me. Always excited to be on the podcast and talk about what's ahead.
So, Roel, on top of this being my favorite time of year from a holiday perspective, I love it because it really sets the trend and the expectation for what we're going to see in the year ahead. So you put out your thought leadership. You've explained you think it's going to be a very active and buoyant year. Can you just talk a little bit about what you expect to see and sort of why?
Yeah, Glenn, thanks for having me again. Great to be here. And I agree with you on the time of the year. It's great to sort of look ahead. Listen, we're very optimistic for 2026. You know me by now. I'm an optimistic individual, but we're very optimistic about where activity levels are going to sort of go in 2026. Well, why do I believe that? We're going to continue to see precision-led growth to continue in 2026. We think that therapeutic focus will intensify and continue to drive capital allocation. And as you kind of previewed in your introductory remarks, the pace of innovation and the premiums for innovation will continue to accelerate. So that's effectively what we've laid out as our vision for 2026. Why do we believe that, right? Because I think it's important to kind of peel that back a little bit. Listen, I think if you look at the market in 2025, both for biopharma and pharma services, it's been very focused on targeted and asset-centric transactions that really filled gaps in the pipelines. Buyers continue to look at innovation in the standard of care and therapies that really make a difference in patient lives and are directing their M&A capacity, both from a cash flow as well as from a balance sheet perspective, to those areas where innovation arises. I think on the therapeutic area front, we continue to see, and you referred to it as well, innovation in the therapeutic areas that's truly fantastic, right? Whether it's in CNS, where we've seen strides, whether it's in oncology, whether it's immunology, that's where the pace has really been high. And I think if you then take a step back and think about, and we've sort of quoted this in the report, 2026 through 2029 are really going to be the years where the losses of exclusivity of currently patented global pharmaceutical revenues are going to pick up, right? So the headwinds are going to be more profound over the next couple of years than they have been over the last 2 to 3 years. And I think if you combine all of that, you're sort of effectively having a setup where we expect that corporates are going to increasingly lean into external innovation and look where they can source those companies and those compounds that really can deliver for the enterprise.
No, I think that's great. I think your comments on this precision-led growth with this TA focus, and it's been clear, I think we've seen a lot of value creating M&A over the past couple of years. I think a lot of the corporate development, the heads of strategy, and certainly leaders, I think, have been very disciplined about how they invest, where they invest. There's no doubt, as you sort of highlighted in your report, premiums continue to be high. But I think like anything else in the world of, if you're betting on good science, it's a binary outcome, and that outcome hits, it's sort of okay on the premium side because you're going to have those kind of returns. So I think a great point to highlight there. As you think about, and you touched on it with TA focus, how do you think about types of investments there, right? Because we always sort of 5 to 10 to $15 billion biotech, singular product or within a product family TA investment. How do you think about bigger deals? What's going to be different this year in your mind?
Yeah, it's a great question, Glenn. I think we've seen a preference in the market for that 5 to 15 billion EV range recently. And I think the reason for that was it was easier to string together transformation through smaller deals, more specialized, more focused, more precision. And it's also kind of coupled with sort of the regulatory regime that we've had for a long time that was kind of acting as a bit of a brake on kind of larger scale M&A, right? Like we've seen the industry over the arc of a long period and episodes lean into larger scale M&A. We haven't really seen that. I think what's perhaps a bit more in store for 26 is that we could perhaps see companies leaning into more I wouldn't call them mega deals, but larger transactions than what we've seen over the last 2 years or so, and perhaps kind of go up from the 5 to 15 to perhaps more into the 15 to 25 or 15 to 35 range. And why do I believe that? I do think, per my prior remark, that we're now really starting to see these LOE gaps be more pronounced for certain acquirers, and they require augmentation beyond internal innovation to complement the external innovation, right? So I really think that that's perhaps leading the market to somewhat larger transactions. The other factor there is I think we're going to wade into an environment in 26 that I think is now a little more predictable from a policy perspective. We've seen elections in 24, some changes in the regulatory domain and the pricing domain and the health agencies in 25 that certainly have acted as a bit of a brake on M&A because the uncertainty existed. And we now also going to have a marginally more constructive stance in the interest rate environment with balance sheets and debt capacity that's still very good across the sector. So if you combine all that, put that in the blender, I do think there is certainly an opportunity that we could see a little bit more larger transactions going into 26, which I think is kind of what you're speculating, around in your question as well.
I think it's interesting too, because you're right, capital exists. People want to deploy it in the most efficient way. And I think certainly 2025 and previous, we've seen that $5 to $15 billion deal. And I think the interesting thing is probably on the supply side, because science has evolved, we're actually seeing companies with a lot more value or valuation. And so combine that with the need, and hopefully it's a match to be made there. As you think about the world ahead, right? Like a bunch of years back, we were flying all over the world, looking at assets everywhere. That became a little bit U.S. centric for a bit. How do you think about cross-border? You kind of mentioned, we may be back to a little bit of sciences everywhere. Can you just talk a little bit about that?
Yeah, I think you're right. The pendulum always swings, and that's what's making this industry so fascinating. When we talk about global innovation, I think the talk of the town really is China. And I think it's sort of phenomenal in terms of the progress and the strides that have been made there over the last couple of years, right? We're seeing cutting edge science, the speed through the regulatory pathways and cycles is significantly in excess of what we're able to do domestically. And I think we see a lot of US MNCs and global MNCs for that matter, really leaning into effectively the innovation that's coming out of China. And I do think that that's a trend that's here to stay and will continue. Glenn, you've been in the industry for a long time too. I think the debate is raging at the moment. What does it mean for innovation in the US and biotech and science in the US going forward? There's a lot of fantastic things happening in China. I'd be cautious to bet against the US. I still think that the US capital markets, the universities that we have continue to be second to none. But I think corporates will continue and have sort of been leading into this, increasingly look into the innovation that's popping up there, right? So, I think there's been conferences that have spoken about how fast clinical trials can get run, how fast the regulatory pathway is, how the setup is from a capital markets perspective in Hong Kong and other places. That trend warrants continued monitoring and I think necessitates a deliberate strategy in the C-suite here in the United States. But again, I continue to be bullish on what we're able to do here domestically as well. I think it creates better outcomes for patients. Global hubs for innovation, I think generally on the margin is a good thing. So I continue to watch for that and where it will go in 26. But the direction of travel is very clear, Glenn, and I think you kind of alluded to it in your question.
Yeah, no, I mean, listen, I think the innovation coming out of China, it's clear. It's pretty consistent as far as the themes. I'm super encouraged that the FDA is looking at processes to figure out how we can continue to balance risk with speed and make sure we can be competitive. So I think that's an interesting one. But certainly no doubt for 2026, I think there's going to be a lot of activity outside the U.S. So thank you for sharing that. And as Roel, as we close this out and we leave our listeners with a last thought, maybe the question is, what's the watch out? What's the thing that maybe you sort of have in a back pocket that you said, wow, that would be interesting if that plays out, to leave people with an interesting note, if you will?
Yeah, I mean, I am an optimistic individual. I'm very optimistic for 26. I think we've talked a lot about the backdrop on the regulatory front, the elections, the interest rates for the last 2 years. In a way, it might be a predictable and kind of stable year for all those factors going into 26. And I think generally speaking, that is a good thing. So Glenn, I see M&A continue to evolve at the pace that it's been over Q3 and Q4 here exiting 25. And I'm just very excited to see where innovation will take us and M&A will follow from there. That would be my spin on kind of where I see 26 pan out.
Roel, thanks so much for your insight here. I think it's great to kick everybody off with the optimistic view of what's going to look ahead in 2026. So thank you for being here. Happy holidays. Everybody else, thank you for tuning in to PwC's Next in Health. For more on these topics and other insights across health industries, please subscribe to our podcast at pwc.com/US/Next in Health podcast. Until next time, this has been Next in Health.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates, and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.